Alrighty, good morning. This is the analysis of the US dollar to start us off with. And the question is whether or not the market has overreacted to the CPI data. Um, the US dollar, as you can see, fell off a cliff. This is the 1 hour chart on a fresh week. So we've got Monday pushing lower and Tuesday, very strong move all the way in. If we pull out to a longer term chart here, all the way into this area right here. So I'm just going to highlight that as a potential support area. That's not to say that this can't continue lower, and it may well do. If we come back to, because a lot of people will be looking for the reversal here. If we come back to the hourly chart, let's go to a 4 hour chart first. I mean, there's a number of structures, obviously, that have been broken on that move. So below here, we are remaining in bearish territory. So it was a support, supposedly a support area, which essentially the market just ripped through. So while below there, this remains in bearish territory. Today, we are still within Tuesday. Today, we're still within Tuesday's range. So it's an inside day at the moment. We have not broken the low. Okay, so if we come down to a 1 hour chart, we're finding support so far. So we've come down in Asia. We found support at that lower bear candle. And rising above that, we've come back in to test support in here. So there's a number of layers at the moment. I'll just mark them off with levels. So these are the key levels for the day ahead. And it could be another busy day given the data that we're just going to have a quick glance at, just to be aware of what we've got coming up. But on the upside, there's the high of the day so far. In terms of the data, we've got PPI and retail sales, both of which will be important. Now, it will be interesting, won't it? Because one data point, i.e. yesterday's CPI, was enough to warrant a 22 basis point drop in the 10-year yield, which consequently led to over 1.5% free fall in the DXY. And this was generally based around a dovish Fed narrative, but there's still a long way to go before the Fed can really claim a victory. So we've got the 13th of December meeting, and we've still got a number of data points to come to confirm the narrative. Having said that, the dollar does remain vulnerable to further near-term weakness, just from this technical outlook, and a break of the lows of yesterday will open up. If we look to the daily chart, we'll be looking for a test down towards at least here, and all that space between the high and the low of that candle. Okay, so that's generally where we're at. There's nothing to do until the data comes out, react to the data, well, reacting to the reaction of the data in the market, and see if there are any setups across the board on the back of it. I would hazard a guess that the market's going to want to test these lows, but the risk is likely more tilted to the upside if the data comes in stronger than expected, perhaps. Because at the end of the day, it would appear that the US economy continues to grow above trend while the rest of the world slips into a recession. So if these price pressures remain persistent enough, then the Fed may have to hike again, and sooner than the market thinks. So yeah, that's generally where we're at. So we're going to keep an eye on this data that's coming up. 7:30 New York PPI and retail sales. And thereafter, we got Fed's Barkin speaking in the afternoon, and I think that is probably about it for the day. But it is Wednesday, so we've got a fair bit to fall back on in terms of order flow. So third day of the week, and it's either going to be a continuation trade in the dollar, or we're going to get a correction, which will set us up for various opportunities across the board. So we'll get into those now and see what we're looking like. And that will come in a series of adjacent videos to this one.